The headlines hit at 4:52 p.m. Eastern on a Saturday afternoon. President Trump posts on Truth Social. An agreement has been largely negotiated. The Strait of Hormuz will be reopened. Here we go again. The market's 3-month geopolitical nightmare suddenly has an off-ramp. But read the fine print. Iran's Fars news agency immediately fires back, calling Trump's assertion inconsistent with reality. Tehran insists the strait remains under Iranian control. Their chief negotiator, Ghalibaf, warns that if Trump restarts the war, the response will be more crushing and bitter than the first day. And here is the critical variable the mainstream is missing. The cash equity market has already gone dark for the holiday weekend. Regular trading closed Friday at 4 p.m. The bond market shut down early Friday at 2 p.m. under SIFMA guidelines. By the time the opening bell rings Tuesday, we will have accumulated over 65 hours of diplomatic whiplash with zero ability to trade cash equities. Welcome to Market Lens. I'm Daniel Reed. It is Saturday, May 23, 2026. The Dow closed at an all-time high, 50,579. Its first record since the war began in February. The S&P 500 has strung together 8 consecutive weekly gains. And now we are in a 72-hour information blackout with a 50-50 coin flip on whether we wake up to a peace deal or a resumption of hostilities. Today we are mapping the 3 tactical scenarios for the long weekend, decoding what largely negotiated actually means in the 14-point framework, and identifying the positions you need to adjust before Tuesday's gap open. First, let's establish the timeline. At 4:52 p.m. Saturday, Trump publishes his Truth Social post. He has just finished calls with the leaders of Saudi Arabia, the UAE, Qatar, Pakistan, Turkey, Egypt, Jordan, and Bahrain. Then a separate call with Netanyahu, which he describes as going very well. The post uses precise language. An agreement has been largely negotiated, subject to finalization between the United States of America, the Islamic Republic of Iran, and the various other countries. This is not a done deal. This is a public positioning move designed to do 3 things. 1. Pressure Iran's hardliners by creating a perception of inevitability. 2. Reassure domestic energy markets ahead of the holiday weekend. 3. Lock in the Gulf allies who just spent the call urging him to accept the framework. The market priced in progress on Friday. $400 billion in equity market cap added at the open alone. But progress is not resolution. The 72-hour gap means Tuesday's open will be the first pure price discovery on whatever happens in the Situation Room tomorrow. Let's cut through the fog and look at the actual architecture of this deal. 3 regional officials confirmed to Reuters and AP that the framework is structured in 3 stages. Stage 1, a formal declaration ending hostilities. This is the off-ramp headline. Stage 2, a phased reopening of the Strait of Hormuz and the lifting of the U.S. naval blockade on Iranian ports. The blockade has been devastating. CENTCOM confirmed it has redirected 100 vessels and disabled 4 since April 13. Iran's own economy is in free fall, with the rial in collapse and inflation above 70%. Stage 3, a 30 to 60-day negotiation window for the hard issues. Iran's near-weapons-grade uranium stockpile, sanctions relief, and the long-term status of the strait. The Iranians are insisting on a 14-point MOU that covers ending the war on all fronts, including Lebanon, where Israel is still engaged with Hezbollah. They want sanctions lifted and frozen assets released. The U.S. is demanding Iran turn over their enriched uranium and accept SNAP inspections at any enrichment site within 24 hours. Point 7. The SNAP inspection mechanism is historically where these deals collapse. The market didn't flinch on Friday because institutional money is betting Iran's economic desperation outweighs their nuclear ambitions. But here's the hidden variable. Pakistan's Army Chief Asim Munir shuttled between Tehran and Islamabad all week. A revised proposal was submitted to Washington Saturday. The response is expected by Sunday. If the U.S. accepts, it triggers 30 to 60 days of framework negotiations. If the U.S. rejects, Trump's own words apply. No country will ever be hit as hard. The Qatari negotiating team is in Tehran. The Gulf leaders are aligned. Rubio is in New Delhi saying, "We may have something to say in a couple days." The diplomatic machinery is moving at maximum velocity. But in markets, velocity creates gaps. Now let's talk about the structural condition that most analysts are ignoring, the holiday liquidity trap. The NYSE and NASDAQ are fully closed Monday, May 25th. The bond market shut down early Friday at 2 p.m. Eastern under SIFMA guidelines. When U.S. equities reopen Tuesday at 9:30 a.m., they will be absorbing 72 hours of accumulated geopolitical headline risk in a single printed opening print. Here is what remains open during the gap. CME equity index futures trade on a holiday schedule. Thin liquidity, wider spreads, no cash market to anchor them. FX spot markets operate 24/5. The dollar will move on every headline from Tehran, Islamabad, and Mar-a-Lago. Crypto trades 24/7. Bitcoin has been a leading indicator of Iran risk appetite all year. International equity exchanges, London, Tokyo, Hong Kong, Frankfurt, are open Monday. Their price action will be the tape U.S. traders wake up to Tuesday. This matters because of the following math. If a deal is announced Sunday, expect Brent crude to gap down $6 to $10 per barrel on Tuesday open. The peace dividend trade, long consumer discretionary, short energy, long emerging markets, will execute in the first 5 minutes of trading. The Dow could gap up 300 to 500 points. If talks collapse, expect the reverse. Brent spikes back above $110. The VIX doubles. The conflict premium reasserts itself across every sector. The Dow gives back its record and then some. But here is the third scenario no one is talking about. The MOU handshake without details. This is the most probable outcome based on the structure of the negotiations. Iran and the U.S. sign a framework agreement Sunday that extends the ceasefire 30 to 60 days, reopens the strait in phases, and punts the nuclear question to a future negotiating round. In that scenario, oil settles into a $90 to $100 range. The S&P grinds higher, but with reduced velocity. The VIX drifts lower, but does not collapse. The market reprices from conflict discount to stability premium, but stability is not the same as peace. Each scenario demands a different positioning strategy. If you are flat going into Tuesday, you are gambling on a coin flip. Let me give you the concrete framework for Tuesday's open. Scenario A, the signing, 30% probability. Full MOU signed Sunday. Straight reopening timeline announced. Nuclear talks deferred 60 days. Trade, long consumer discretionary and emerging markets. Short oil and defense contractors. S&P target, 7,600. Warning, the initial gap up will be the easy part. The hard part is the 60-day negotiation window where every Iranian enrichment tweet shakes the tape. Scenario B, the framework handshake, 50% probability, base case. The 14-point MOU is agreed as a framework. Ceasefire extended 30 days. Strait opens under a phased mechanism. Nuclear uranium issue deferred. Trade, long tech and AI infrastructure. Neutral energy, short volatility. S&P target, 7,500 to 7,550 grind over 2 weeks. Warning, this is the highest conviction play, but it will be slow and subject to headline whipsaws on every snap inspection headline. Scenario C, the breakdown, 20% probability. Iran rejects snap inspections. Trump orders strikes, strait remains closed. VIX explodes, trade, long oil, gold and defense, short high beta tech. Cash is a position. S&P drawdown target 3 to 5% in 48 hours. Warning, this is the tail risk the market is underpricing. The VIX at 1420 does not reflect a 50-50 ultimatum from a president who has already launched one war. Keep your data sharp and your logic sharper. I will see you at the Tuesday opening bell. I'm Daniel Reed. This has been Market Lens. Keep your data sharp and your logic sharper. I will see you at the Tuesday opening bell. I'm Daniel Reed. This has been Market Lens.